The investor's dilemma is a question that poses a significant obstacle to investors' financial success in the dynamic world of finance. And one name stands out above the rest at the center of this mystery: Tesla. We are setting out on a quest today to solve this puzzle, learn the timing secrets, and find the secret to releasing the full potential of Tesla stock. Let me tell you, there are many reasons to believe that a huge stock price surge is imminent given the startling happenings we will be discussing today. Greetings, ladies and gentlemen, from a world where opportunities abound. Decisions have the power to alter one's financial destiny, and fortunes are made. The journey to Tesla's success begins right now, so fasten your seatbelt. But please remember to hit the like button before we go on. Additionally, remember to hit the subscribe button to receive updates about Tesla. Let's continue with this video after that. Following the release of the company's shocking Q2 results report, the stock has seen a volatile ride, declining by almost 20%. The stock market's remarkable comeback last week prevented the shares from falling by a staggering 25%. But hey, what do you know? With a staggering 98.9% gain in value so far this year, Tesla's stock has been a money-making extravaganza for investors, while the S&P 500 index has only increased by 17.6%. Do you recall that one-month misstep? Put it down to those deceptive price cuts, which set off a sudden increase in competitiveness and the foreboding shadow of margin worries. There's much more to the tale, though, so hold on. To begin with, it appears that the market is severely forgetful of Tesla's Q2 surprise. We're talking about figures that seem out of this world, as Tesla produces an astounding 480,000 cars annually and delivers close to 466,000 of them. Compared to last year's snoozefest, there has been an 83% increase in production and an 86% increase in delivery. Since the year began, Tesla has been slashing prices left and right, and yes, that has slightly hurt their quarterly margins. The surprising thing is that those price reductions didn't have the same impact on profits as the Wall Street cynics had predicted. The excitement doesn't end there, so hang on tight. Tesla is preparing for the highly anticipated release of the Model 3 Highlander, the vehicle that has been anticipated by all. There are rumors that it will cost even less than the present Model 3, which would lead to an insane delivery frenzy in the second half of the year. Not only that, though, Tesla is placing a lot of money on its fully autonomous software, which is akin to a superhero cape that will come through for the day. It will be a cash cow on autopilot once it reaches full speed, not only increasing Tesla's profit margins. Making Tesla vehicles operate without a human driver is the main goal of FSD. It is now at level 3, meaning that a human co-pilot is still required. But thanks to Tesla's ambitious plan for robotaxis, once it seizes control, it will not only boost Tesla's earnings but also keep the cash registers ringing with recurrent income. Thus, if you're still debating whether or not to join the Tesla bandwagon, get ready for a wild ride. You have to see what's going on in the world of electric cars these days. It resembles a futuristic race, and you can guess who's leading the pack. Yes, it's Tesla, and they really do have some incredible tricks up their sleeves. To start with, Tesla is all about being on the cutting edge of technology. They resemble the EV world's magicians. They have created some incredibly inventive content. I'm referring to batteries that are so effective that they give the impression that the competition is still catching up. Imagine this. Compared to conventional cars, a Tesla can travel far longer on a single charge. For example, the competition can only go about 259 miles on a single charge, but the Tesla Model 3 long range can take you on an incredible 358-mile voyage. Comparing a marathon runner to someone taking a casual stroll in a park would be analogous. And there's also the autopilot system from Tesla. It is comparable to having a personal driver. It may take over driving responsibilities on highways, providing you with a rest and adding a great deal of enjoyment to those lengthy travels. Picture yourself lounging back, unwinding, and taking in the scenery as your car handles the heavy lifting. It sounds like something out of a science fiction film, yet Tesla is bringing it to life. But there's still more. The network of Tesla's superchargers is revolutionary. It's similar to having your preferred coffee shop on every corner, only with lightning-fast auto-charging in place of coffee. Supercharger stations can be found all over the world, so you never have to worry about running out of juice again. It's similar to having a reliable friend who is always there for you. Let's now discuss Tesla's merchandise, their perception of their brand. Because Tesla is all about innovation and becoming green, people adore them. They may charge more for their cars because of the great reputation of their brand. In actuality, a Tesla's average selling price in 2021 was more than $50,000. That demonstrates how much people value what Tesla stands for, far more than the typical electric vehicle. This is where things become even more fascinating, though. When it comes to production efficiency, Tesla is unmatched. They take a different strategy in that they create nearly everything themselves, which reduces their expenses. In contrast to its rivals, who must purchase battery cells from outside vendors, Tesla handles everything internally. It is akin to possessing a proprietary formula for achievement. They have a huge cost advantage as a result. The cherry on top is that Tesla is well funded. They have an abundance of money, more than $18 billion to be precise, and they don't require borrowing funds. Their financial strength enables them to easily increase their manufacturing capacity and make significant investments in R&D. But wait, the story takes a turn here. With conventional automakers jumping into the EV game wholeheartedly, the battle is getting fiercer. It resembles the pivotal confrontation in an action film. Thus, the key query is Tesla able to maintain its current lead and pace? To maintain their lead, they will need to continue pushing the envelope, investing heavily in innovative concepts, and producing more automobiles. This one should really stump your intellect. The market is similar to the guy who is blindly disregarding a gold mine that is right in front of them. Although everyone is obsessing about Tesla's electric vehicles, they are ignoring this little gem of a discovery, Tesla's whole self-driving software, which is revolutionary. The insane aspect. It's possible that Tesla will allow other manufacturers of electric vehicles to participate. Yes, Tesla's adversaries may end up becoming its closest allies. Consider that. But there's still more. In North America, Tesla's superchargers, those fast charging locations that seem to be everywhere, have taken over as the industry standard. They resemble Starbucks in the EV industry. This is also not being kept a secret by tsla. It's official. They've signed billing agreements with Ford and General Motors. This implies that GM's electric cars will be cozying up to Tesla's charging stations in the not-too-distant future. Tesla is spearheading the development of what amounts to an EV universal plug. Imagine this. It's late October, the leaves are starting to fall, and Tesla is preparing to release its Q3 financial report. With its calculator out, Wall Street is calculating and projecting an 80-cent profit per share on a staggering $24.67 billion in revenue for the 3 months ending in September. It's significant, but first, let's go back in time a little bit. In the same time frame previous year, Tesla's earnings per share came in at $1.05 with $21.96 billion in revenue. This is when the intriguing part comes in. Earnings are expected to decline slightly to $3.44 per share for the entire year. Nevertheless, income for the entire year is expected to soar to $9.78 billion, up a staggering 22.5%. That would be like boarding a rocket ship instead of a fun ride. Prepare for the stock to soar if Tesla has a stunning performance, exceeds forecasts, and provides some outstanding full-year guidance. We are discussing a ride that goes above $300. That would be like taking a ride with Tesla at the present $245 price point. It's similar to being given the all-clear to board. Not to be overlooked is Tesla's network of superchargers, their energy-related endeavors, and its AI-powered fully autonomous vehicle. It's comparable to the best possible package deal, with the potential to send Tesla's stock skyrocketing. Tesla is that bold pioneer of the world of electric vehicles. But don't lose hope, there are some bumps in the road. Let's examine a few of the dangers you should be mindful of. There are several formidable competitors vying for Tesla's business. Conventional automakers are funding EV development with enormous sums of money. With well-established production and distribution networks, they have an advantage over Tesla and may even be able to challenge it. However, they are more likely to become allies in the near future, as we have already stated. Imagine this. Tesla's supply chain may be severely disrupted by events like the COVID-19 pandemic or international conflicts like the one in Ukraine. Lack of essential components and materials could limit Tesla's production approach and negatively impact their bottom line. Tesla is engaging in a high wire performance when it comes to the technology game. Should rivals surpass Tesla with more sophisticated electric vehicle technology, Tesla may experience a decline in its appeal and market share. Remember that Tesla must comply with several rules, both domestically and internationally. But hey, what do you know? These regulations are subject to modification, which might throw Tesla's strategy for a loop. The truth is that Tesla resembles that young adult that is still establishing its financial footing. It's carrying a heavy debt load and hasn't consistently produced a profit. That alone is like to walking a tightrope with money. Right present, the price of Tesla's stock is fluctuating a lot. It is being traded at extremely high prices. In essence, consumers are paying more for Tesla's aspirations for future expansion. Elon Musk, the CEO of Tesla, is also a genuine character. Some people adore him, while others don't. He is renowned for making outrageous claims and acting erratically. Fasten your seatbelt. Although Tesla vehicles are environmentally friendly when driven, the process of producing those EV batteries isn't without its challenges. It involves mining several materials, including lithium, which can have detrimental effects on the environment. Here's the thing, making an investment in Tesla is similar to playing high-stakes poker. You must consider these expenses and assess the dangers involved. Tesla's stock is capable of corkscrewing and looping the loops. It's not something to take lightly. Tesla is more than an American company. Modifications to the global economy may have an impact on the company. There are dangers associated with running a tech company, such as keeping up with emerging trends. In summary, Tesla is not your typical investment. It's quite the journey. Before making the leap, make sure you're up for the experience, do your homework, and consult with a financial expert. And there you have it, people, the exciting world of Tesla stock broken down in front of your very eyes. We now have a few questions for you before you dash off. What do you think about the exciting future of Tesla? Are you thinking about getting on the Tesla stock train? Above all, did you have fun on the voyage with us today? Please remember to hit the like button and, of course, subscribe to Tesla Stock News for more thrilling updates and financial adventures if you found this tour of Tesla's world as fascinating as we did. We appreciate your time and hope to see you in our upcoming videos. Music.